Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you get some good trades. Let's continue on our topic of keeping it simple in your trading. Again, too many traders find themselves using very extensive trading strategies, trying to figure out where they can get the most out of the marketplace, when oftentimes the most basic, simple ways of trading can yield plenty of pips if you are aware of certain setups. Well, I want to show you a setup that's pretty easy to use. You're simply looking at a break of an average high and a break of an average low. And I tend to use my Synergy average price bars. I'll go show you where you can get that a little bit later, but it's a form of the HighLow bar. And I'm simply looking for continuation of a trend after the break, and that's going to be important here. So two elements of this technique. This technique is marking the average highs, marking the average lows, and then we're going to trade in the direction of a continued break. And basically when we break that average low, where we break that average high, if we look at the color of the average price bar, the color of the HighLow candle, and see that it is the same color as the break, we're going to see potential continuation. Well, we had just that happen overnight in the Euro Aussie, and what I'm noting here in the Euro Aussie, again, I have my average price bars on the chart, and you can see that we have average highs here. Now you'll notice first and foremost that I don't have the highest high, nor do I have the lowest low. I average them. I look at 3 to 4 bars and find that average high, and look at 3 or 4 bars and look for that average low. The next thing I do is I look for either a closed bar beyond, depending upon the time frame I'm trading, or I look for a strong momentum bar breaking that average high or average low. Now let me make a point. The higher time frame you use, the more you should look at the momentum of that bar. If you wait for a 4-hour bar to close, you might have missed the move. Now this technique is more designed for active traders down on that 15, 30, or even possibly a 1-hour chart. So again, let me give you some examples. In this case, we take the average high of the Euro Aussie overnight, which was right around 42.12, and the average low was sitting in the ballpark around 142, or I show here 142.03. The market broke that. Now, being down a 15-minute chart, you have the option to literally trade the momentum of the break, or wait for this to close, that candle that broke to close, and then the next candle opens up. That's the candle you're going to be trading as long as you have continuation in the direction of the break. And the beautiful thing is, when you're using the average price bars, or you're using HighLow style bars, you're seeing that continuation because these bars average out the highs and lows and shows you more or less the undercurrent or the under trend of the market. I call it the real trend of the market. It literally takes out some of the noise, some of the up and down movement that usually occurs when you're looking just solely at close price. So it reduces the noise of the market, and you get to see that underlying current or the underlying trend of the marketplace. And what a nice, beautiful trade overnight simply using this setup. And notice there's no indicators here. Now if you want, you can add an indicator. So for instance, if I were to put on my Synergy Traders Dynamic Index basic indicator, okay, just add that to the chart, what I'll be looking for is this break and the Traders Dynamic Index, are they similar in direction? And this is a model that I put together years ago called the Synergy Trading Method, and basically what we're looking at is price action compared to market sentiment. If market sentiment and price action are moving the same direction, you have a higher probable trade. But again, let's go back to this method here, keeping it real simple. Again, we look at average highs. In this case, we have an average high somewhere right around 65.94. We have an average low coming back to this low here, some lows here. You can see coming back, we even have some lows further back here that took place. And so what we look for now is that we have the average highs, average lows. We look for the break, and when we get that break, we're either going to enter in after a closed candle after the break or a momentum candle after the break. In this case, we make a break, we get a momentum candle pushing down pretty strong. We can enter in on this, sometimes entering in on that last low point. The break of that last low is a good potential trade. So we enter on that, and this trade then produces about a 20 pip trade on this 30-minute chart. Obviously that Euro Aussie 15-minute chart, even if you got in at the close of this and you traded it down somewhere in the middle here, that's about a 40 pip trade. Another trade of note that took place today is, again, taking the average highs and the average lows. Now, you might think to yourself, well, we have a close and an open up here. Why don't you consider that? Well, you could. It's just another couple of pips higher, not much higher, but you could do that. I'd like to look for 3 or 4 high points. And I have those 3 or 4 high points right there. And this makes a move up, but isn't sustained and falls back in. And then I have 1, 2, 3, about 4, 5, 6 right in a line just about in that area. And again, the market moves down, a nice momentum candle breaking this last low back here. So you have a potential trade here coming down from about 31.85 coming down here and currently sitting at about 31.65 area. So there's another 20 pip trade. You can do this on a higher time frame like the Kiwi yen. Here's 3 different examples of simply trading the break of an average high or average low and trading the direction of that average price bar as it's making a momentum move away from the break. And so in this back and forth, we get a break. In this case, it closed. And let's say you entered on that close right there and you got in and the market came down, settled somewhere in here. Again, that's about a 40 pip trade. Now again, the market breaks, closes here, you get in on that close, the market comes down, comes back up, you have about a 20 pip trade. This kind of moves up and down. Now in this case we had about 1, 2, 3, about 3 or 4 average lows. We have a high, another high, and then we break here a little bit above and then make that move up. So from that close above up and then settled, that's about a 50 pip trade right there. So again, very simple technique, and in keeping with the topic of keeping your trading simple, this is simply it. Again, you're looking for 3 or 4 highs that are about the same. You're looking for about 3 to 4 lows that are about the same. Draw your line. Look for a break of that and continuation, some good momentum in that direction. And I like to use the Synergy average price bars in order to do that. Now you can get both the Synergy average price bars and the Synergy Traders Dynamic Index Indicator if you go to www.compassfx.com/Synergy. Simply register for a free copy of Synergy and you'll get both indicators, the Synergy average price bars and the Traders Dynamic Index. Well, y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.